So it's based around a thesis that I've developed called the exponential age, which is, I think most people are familiar with now. It's a similar thesis that other people have had as well, which is that we've got this kind of group of technologies that are in full tilt acceleration mode when we get to full adoption of these technologies. So that's AI, robotics, renewable energy sources, genetic sciences. It's a whole bunch of these technologies, including blockchain, that are all hyper-accelerating at the same time. So, okay, fine. So the exponential age is really all about, this is the fastest, largest pace of change of technology that humanity will ever go through. And it's probably an entire reworking of society itself and the economy.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. We've got about 6 years. I put 2030 as a rough date when we don't begin to understand how anything works. And so therefore, I would like to be on the other side of that protected. Raoul Pal.
So what do I mean about the economy? This is this 6-7 years business. Is really, it's to do with how the economic machine works. Basically, GDP growth is driven by population growth, productivity growth, and debt growth. Debt growth has basically stopped except refinancing of old debts. Then we've got population growth. Every country in the developed world is seeing collapsing population growth. So therefore, they should see collapsing GDP growth. But you've got all this debts, and we've been adding to the debts to try and counterbalance this. This has been this big super trend we've seen. And then productivity growth, because of all the old people, has collapsed as well. So what we have is non-productive, slowing economies based around demographics. Then something has just happened, which was we've just introduced infinite human knowledge and infinite humans into the economy, which is AI plus robots. People don't yet understand what this means, but we're based on a services-based knowledge economy. Manufacturing was already being replaced by machines, but this is replacing everything. Now, there's two sides of that. One is the doom of, oh my God, what are humans going to do? I worry less about that. I more think, what the fuck does it mean for the economy if we've got infinite growth of humans? So if generally, let's say, population growth or immigration growth, whatever, is at 1%, 2%, 3%, right? And trend rate of GDP has been averaging of like 1.75 in the US. If you suddenly throw in 1 billion AIs and 1 billion robots, you've kind of added 25% of the population of the world. Now, it's not one-for-one match, but what it does is suddenly create outsized economic growth, but in ways we don't understand. The other part of it is productivity. Productivity I think of as the amount of output per unit of energy. Electricity is the generalized energy, and what we're doing is lowering the cost of energy via renewables. People don't see it yet, they don't believe it yet, but what you see of every technological curve is they're all collapsing in cost, and the output's going up. So electricity growth via renewables is just an exponential curve. And Elon's been talking about this, others have been talking about this. It will, within the next 10 years or so, it'll be the largest source of energy on the planet.
BlackRock's spot Bitcoin exchange-traded fund recorded its biggest day of inflows since its launch in January as crypto markets surged. On October 30, BlackRock's spot Bitcoin ETF recorded inflows of $875 million, according to CoinGlass data. This marked the highest inflow day for IBIT since its launch on January 11. The figure has surpassed IBIT's previous high of $849 million set on March 12, as per Farside data. It also marked the 13th consecutive inflow day for IBIT, totaling about $4.08 billion in inflows during the period. Traders are speculating that a $1 billion inflow day may be imminent. I said $1 billion inflows? It was not a joke. Crypto Trader Trading Axe told their 70,300 X followers. Meanwhile, Crypto Trader Cozy the Caller said to their 164,100 followers that it is going to be above 1B the day we break ATH for sure. BlackRock's performance eclipsed the other 10 US-listed spot Bitcoin ETF, which brought in a combined $21.3 million in inflows. Fidelity Wise Origin Bitcoin Fund ranked second with $12.6 million, while Bitwise Bitcoin ETF saw the lowest with outflows totaling $23.9 million. Some analysts say the United States presidential election on November 5 could be a catalyst for Bitcoin to climb above its previous high. Swafex's lead analyst Pav Hundal recently told Cointelegraph that a Donald Trump victory would likely provide a dopamine hit. On October 29, IBIT's daily trading volume hit $3.35 billion, marking its highest level since April 1. Bloomberg ETF analyst Eric Balchunas said that the surge confirmed FOMO among market participants. Meanwhile, on October 28, Cointelegraph reported that in the coming days, the U.S. spot Bitcoin ETF across the board may reach a total of 1 million Bitcoin in holdings.
And then we've got nuclear and other stuff to come into it. When you change productivity, let's say you halve the cost of electricity, you double productivity. Now you've got AI and robots on top. So what we're going to end up in is la-la land in economic terms. Economies we don't understand. And it's not in 20 years' time, the old predictions we used to see. This is like, it's happening in front of our eyes. So then what happens when you've got these technologies doing this? Well, we don't really know. We're already seeing things like, what is a company when you've got AI agents? What does that mean? What do financial markets mean? How does venture capital work? How does private equity work? How do IPO markets work when companies get disrupted? What is software? If you think about the growth of what we know as the technology sector, it's all been software. But that software you can instantly replicate using a more powerful AI. And AI is building its own AI. So it just gets faster and faster and faster. The costs of compute, costs of electricity keep coming down. And you've created different economic systems and different economic actors that didn't exist before. So we don't know what returns look like from markets. I think markets, when you've got, let's say you invent a incredible new software tool, I just stick it into my AI, it copies it immediately, improves on it. Okay, I can do that in 3 minutes. So then what is a business? How do you value a business? Well, it all becomes about attention, something you and I have talked about, and how long you can keep attention. And so companies start trading a lot more like ICOs or meme coins. And the capital structure of markets change. Now, also, Beeple asked me a great question, which was, well, what happens if somebody gets AGI and trains it on markets? Surely they're just going to make $10 trillion and win everything. And it's probably true. Right? How do we compete in markets when something vastly more intelligent than us? If you think of the average AI right now as an intelligence, an IQ of about 120, I think is the new ChatGPT and Sonnet 3.5, it's going to go to 400, to 1,000, and then to 1 million. So we can't comprehend what any of this means. And so, in the end, I think we've got about 6 years. I put 2030 as a rough date when we don't begin to understand how the fuck anything works. And so, therefore, I would like to be on the other side of that, protected, which is you got the house that you want, you got the lifestyle that you want, and you don't have to be part of the economic machine.
Michael Saylor's MicroStrategy is gearing up to raise $42 billion over the next 3 years to accumulate more Bitcoin, the firm revealed. The plan, dubbed the 21-21st Plan, will consist of $21 billion in equity and $21 billion in fixed income securities over the next 3 years, according to a statement from MicroStrategy on October 30. At the time of publication, $42 billion in Bitcoin is equivalent to about 578,586 BTC, accounting for 2.7% of the total Bitcoin supply. MicroStrategy's president and CEO, Phong Le, said the move would bolster the firm's returns from holding Bitcoin. As a Bitcoin treasury company, we plan to use the additional capital to buy more Bitcoin as a treasury reserve asset in a manner that will allow us to achieve higher BTC yield, Phong said. MicroStrategy reported that its current BTC year-to-date yield is 17.8%, with plans to achieve an annual BTC yield of 6% to 10% between 2025 and 2027. Crypto commentator Bitcoin mining stock guy said that he was bullish on the news after pointing out that $21 billion is like the total market cap of all the public miners combined. Meanwhile, quant volatility researcher Rand McInnes weighed in on the plan, saying that it is escape velocity. The only question is how wide will the gap be between NSTR, every other pubco on Earth combined, and even countries. This comes after McInnes said on March 6 that MicroStrategy was a monopoly of value. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.